Good morning and welcome to today's market update. I'm Maya Keynes, joined by financial expert Eli Sterling. We're diving into a turbulent week across both crypto and traditional markets, with Bitcoin and Ethereum leading the charge in digital asset volatility.
Thanks for having me, Maya. This week really underscores how interconnected everything is, from crypto corrections to institutional investor shifts. Let's jump straight into the data.
Let's start with Bitcoin. The weekly chart shows Bitcoin Tether trading around $86,562, down from a high of $110,060. What does the technical picture tell us?
The Fibonacci retracement shows we're sitting just above the 0.00% level at $80,655, which is critical support. If that breaks, we could see deeper retracements. The relative strength index is at 33.84, hovering near oversold territory, but bearish momentum still dominates. Moving average convergence divergence and on-balance volume are both confirming strong selling pressure.
And what about Ethereum? The weekly stochastic relative strength index shows it's been stuck in oversold conditions for 5 straight weeks.
Exactly. Ethereum Tether is showing signs of exhaustion with relative strength index at 38.88. But the price keeps falling, now at $2,784. The average directional index shows weak trending conditions, and volume has picked up recently, suggesting a potential bounce, but nothing definitive yet.
Turning to stocks, NVIDIA has taken a hit. Our 4-hour trend analysis shows a sharp drop from $187.34 to lows near $172.93. What's driving this move?
Tech profit-taking and rotation fears are weighing heavily. Volume exploded to 21.6 million shares on November 20th, signaling strong institutional selling. It's forming clear lower highs and lower lows, a classic bearish setup. Until it finds support around $173, I'd expect continued downside risk.
On the institutional front, Tiger 21 members have doubled their crypto allocation from 1% to 2%, representing $5 billion of the group's $250 billion assets. How significant is that shift?
Massive. That's a clear signal that sophisticated investors aren't spooked by short-term volatility. They're viewing dips like these as long-term accumulation opportunities. It also aligns with Mike Alfred's approach. He's advocating for concentrated bets in turnaround stories, not chasing momentum plays.
Speaking of Alfred, he mentioned personal responsibility over external pressures when managing large positions. Can retail investors learn anything from his strategy?
Absolutely. His emphasis on conviction-driven investing, not reacting to noise, is crucial. But remember, he's operating with decades of experience and capital buffers most don't have. Retail should never mimic concentrated positions without understanding the full risk profile.
Let's circle back to crypto briefly. Solana's daily zero-lag moving average shows a mixed signal, with price recently crossing above the declining average. Does this hint at a reversal?
Possibly, but caution is warranted. Solana Tether has been below the zero-lag moving average for most of the past week, and while the recent crossover looks promising, the broader trend remains bearish. We need follow-through volume and a break above key resistance at $131.11 to confirm any meaningful shift.
Before we wrap, let's touch on consumer sentiment. Stu Leonard highlighted inflationary pressure on holiday staples like prime rib, up 20%, but turkey prices held steady, thanks to retailer negotiations.
It's a snapshot of how supply chains are stabilizing in some areas, even amid persistent labor and feed costs. Still, discretionary spending power is being squeezed, which historically impacts sectors like retail and travel during Q4.
To close, what should traders and investors be watching tomorrow?
Keep an eye on whether Bitcoin holds above $80,655. If not, look for further downside towards $70K. For equities, watch NVIDIA's reaction at $173 support. And keep tabs on macro developments. Scaramucci noted bipartisan support for crypto among younger lawmakers, which could influence policy headlines.
Thank you, Eli. For our audience, stay tuned for our midday update and check out the charts we've posted online. You can find all visuals and analyses via the link in today's newsletter. Until next time, I'm Maya Keynes.